Good afternoon, everyone. I am Nikki Hall with the NAIC Center for Insurance Policy and Research, and before we get started today, I just want to go over a couple of housekeeping items with you. I know there are a lot of you waiting online outside. You only need to check in with Connie at the registration desk if you are seeking DRC credit, continuing education credits. If not, feel free to come to be seated. Copies of the presentation are at the desk. We also have copies posted online at the CIPR website. The second item is audience questions. We're going to leave some time at the very end, about 20 minutes for audience questions. You have the option of asking questions one of two ways. You can either, there's a couple of standing mics in the front of the room. You can make your way up to the front and ask a question, or you can use Slido. If you've been to any of our prior events last year, we started using Slido for audience questions and answers. It is a great tool. You just go to slido.com, you enter the hashtag NAIC CIPR, and type in a question. I am a native New Yorker. I talk very fast, so if you missed anything, everything is in the program, how to access Slido, as well as the learning objectives for today's program and the speaker bios. Also, really quickly, just to plug in, the CIPR will be having an innovation track during the summit. More information about our track and the schedule is on copies at each table. So with that, I want to I have the honor of introducing Superintendent Cioppa, NAIC President, to the stage to start the program. Please join me in giving him a warm welcome. Thank you.
Thank you, Nikki, and welcome. Welcome to this event on blockchain. I'm very much looking forward to it. I am Eric Cioppa, NAIC President and Superintendent of the Maine Bureau of Insurance. As you may know, CIPR holds programs each year during the NAIC National Meetings and NAIC Insurance Summit. CIPR also offers numerous webinars throughout the year. These programs are designed to be educational and provide a forum for the sharing of opinion and ideas with the intent of informing sound public policy decisions. Today's CIPR event will examine the potential impact of blockchain on traditional insurance models and provide a better understanding of the opportunity and risk posed by this technology. We are also here to discuss some of the public policy considerations that may come to the forefront as a result of this innovation. Much has been made of the blockchain technology recently as a potential disruptive force in the insurance industry. Blockchain technology touts enhanced security, automation of key functions, easier identification, fraud prevention, and many others. Blockchain was originally developed to support the digital currency Bitcoin. This technology is suited for applications requiring transparency of records with a permanent time and date stamp. Due to the system's core elements of encryption, redundancy, and immutable storage, records on blockchain are considered accurate and secure. It doesn't take a lot of imagination to see how blockchain technology could transform the insurance industry by potentially making transactions faster, cheaper, more secure, and more transparent. This technology has a game-changing ability we've seen from the cloud and the internet. However, much uncertainty remains around how it can actually be put to use. Can blockchain technology bring efficiencies through disintermediation? Will it scale? What are the best use cases for the technology in the insurance value chain? The use of blockchain technology is at its very early stage in insurance. For the insurance industry to use blockchain technology would take remarkable amount of coordination, the adoption of data and technological standards, expertise, and perhaps new regulations, not to mention architecture and infrastructure interoperability. NAIC members have made innovation and technology a top priority. The NAIC Innovation and Technology Task Force was created in 2017 and charged with monitoring emerging technologies like blockchain. As regulators, it is incumbent upon us that we balance consumer protection with the benefits of innovation. Since we have a tight time frame, let's jump right in. I would like to introduce Truman Esmond, Vice President of Solutions and Partnerships at the American Association of Insurance Services. At AAIS, Mr. Esmond is responsible for integrating technology advisory offerings and infrastructure with advanced insurance technology to support online product delivery. You can find full bio of Mr. Esmond and the rest of today's presenters in the programs provided at the registration table. Mr. Esmond will present an introduction to blockchain technology, including its history and evolution. Following his presentation will be a panel discussion examining how blockchain technology will impact the insurance sector. Please join me in welcoming Mr. Esmond.
Thank you very much. Well, thank you very much for being here this afternoon and into the NAIC and CIPR for inviting me to speak to you today about understanding blockchain technology and hopefully getting a good primer to get set up for a very interesting conversation this afternoon about what blockchain can do for insurance and really about where we are and where we're going next. Cool, so I think we all agree that judging by the folks in the room that we do think blockchain has got the opportunity to impact insurance in the future pretty dramatically. Certainly the conversations around blockchain to this point indicate there's a lot of opportunity around security and control of your own data, getting reduced friction, as the superintendent mentioned, in these different transactions and making things happen in a much more automatic and objective sort of way, and getting this trust in the trustless transactions, which is a really big concept when we want to talk about different players, parties to a transaction that don't necessarily trust each other, as we see amongst regulators and carriers and policyholders. We've got to break this barrier down, and we're going to do that leveraging blockchain by having a transparent playing field that everybody understands what the rules are, and those rules will be executed objectively. So we've obviously seen a ton of hype and activity around blockchain as well, as it matures in the markets and actually as it starts to be applied. But so far there's been a lot of little actionable or practical value that we've seen in the day-to-day insurance operations, and I think that's something that's going to be changing here very soon. Because it still feels a bit forced. When a company looks at implementing a blockchain network, you're doing it from a position of singular control. And blockchain, the big challenge with blockchain is that it requires collaboration and consensus from, again, those other parties to that transaction you may not trust. So that's a big part of the initial inertia that's tough to get over, and why it's not just as simple as connecting a few computers to a network, much like the internet. So it still looks, when you look at solving a particular problem, if you look at it from the control of a company's perspective, you're probably going to be able to solve that problem within your control using existing technologies and software that you have today. But when you want to expand beyond that, something like blockchain is going to be very helpful. Like I said, adoption does seem a bit slower, and it is because that there's a lot more consensus that needs to be built, a lot more politicking that needs to happen in advance before these networks can really take hold. So let's take a look at what's happening now, because the blockchain as a technology is moving very fast. As the superintendent mentioned, it's still in the very early days of the technology, and much like a baby, that's 2 years old or 3 years old, 3 to 6 months is still quite a bit of that life cycle, and there's pretty dramatic changes happening in that time. And that's about where we are now. So blockchain is dead. Long live blockchain, right? So we're seeing these major revolutions, and we're starting to hear even noise around the industry about how blockchain is moving more towards distributed ledgers. Well, that's like saying a bicycle is moving towards a unicycle. They're really the same sorts of things. Obviously, blockchain is built on distributed ledgers, and we'll talk more about that. And what we're seeing, and a lot of folks in the technology industry kind of agree that we're coming out of, or at least maybe even still in, this trough of disillusionment. When you look at the Gartner curve around the technology hype, coming out of this peak of inflated expectations, I think very well illustrated by the ICO hype that's been happening in the last few years, all these companies distributing and making tokens, making tons of money, but they're not really moving very far. Things like Bitcoin is a proven as a technology perspective and actually at what it's doing. But again, that's much like a unicycle as is to a horse and buggy at this point in terms of where we're going. So those are still very early concepts. And some of these pure models of blockchain, which is truly the idea of distributing power amongst the network to the individuals, are still pretty tough to get to. And at the end of the day, it's going to require government intervention to get there for a regulated industry like our own. So we are proving enterprise blockchain in these gated communities and private permission networks that are not the same as a Bitcoin, a pure implementation of blockchain, or even some of these token systems that are designed for, again, that really ubiquitous ownership of the network. These are the business communities in which we work today that are obviously regulated, that are obviously controlled by carriers at the end of the day, that involve agents and brokers, as well as regulators, reinsurers, and everybody involved. So there's very structured ways that we need to do it today, and that's where we're moving forward with enterprise blockchain today. But even with all the change that's happening, some of the key concepts that we have in terms of the value of blockchain, as well as the things that make up a blockchain, are really remaining the same. And what we want to do today is walk through some of those key concepts so that we can have a broader conversation. So let's get caught up. So some of the key definitions we'll hit, distributed ledger and blockchain. I touched on that just a second ago. Talk about smart contracts. We hit on this a little bit this morning in the Innovation and Technology Committee, but we'll dive into that a little more deeply. The logical and technical definitions of smart contracts. And we'll talk about hashes, off-chain, and off-chain information, which is increasingly important as we get into this third and or fourth generation of blockchain technology. And we'll talk a bit about the platforms that are just now starting to get long-term support. So you can kind of look at blockchain up to this point on the enterprise side has kind of been in beta. Hyperledger, one of the platforms we use, is actually going into a long-term support with this mode, which means we can now start building on it and expect to get enterprise support on these platforms moving forward. Obviously very important as we start to bet more of our business operations on these technologies. We'll talk a bit about the business models and how they evolve themselves, even around the technology, some of the consortia that exist and how those consortia start to build around consensus and community in order to agree on the rules for the playing field in which that we're going to do business. And then we also want to talk a bit about governance and government, obviously a very key issue for this group, and how that plays into blockchain networks and the critical component of them, which is governance. So what the heck is blockchain? So starting, we mentioned at the beginning, it is a distributed ledger technology. IBM defines it as a shared ledger for recording the history of transactions that cannot be altered. When you think about a ledger, it's not unlike it's a ledger just like you think about. It's a log, it's records being added to a log. Now, as the superintendent mentioned, it is immutable, unchangeable. So when we think about the challenges with that, both in terms of size, performance, the ability to change data, much like an accounting record, we don't go back and change information. We have an adjusting entry to reflect what's actually happening today, as inventory is added and removed, as money is spent and accumulated. So we're changing the ledger, not by changing history, but by updating what's actually happening. So when we take that more broadly and talk about blockchain, so there's a bit of a loaded sentence here, but blockchain is a peer-to-peer distributed ledger forged by consensus combined with a system for smart contracts and other assistive technologies. And this is where really the definition is starting to change and evolve even within that. But blockchain networks today are interrelated ledgers. It's not just one blockchain or one ledger. These ledgers are all interrelated to provide a different system, to support complex transactions, and something that's really critical to the industry is data isolation. When you think about Bitcoin, as we mentioned, all the data that is happening within the Bitcoin network is clear text and available. Even if you can't see who the parties are to a transaction, you see the information that's out there. Certainly that's not the ideal situation for insurance, and we're going to talk about how that has changed to provide that data isolation and true data security to do these enterprise use cases through these private permission networks that we have today. We'll touch on smart contracts really quickly, going beyond what we did a bit this morning. So there's two ways to look at smart contracts. If you ask folks that are outside of the technology space, smart contract elicits some very clear visions about really a dynamic contract, something that's living in space and taking information from the outside world and reacting to it. So we've got, and those contracts, those technical functions are happening in an automated and really what's important is objective execution to enforce the terms and the rules of those contracts in the real world. Some examples of that are things like a parametric product feature. If it rains 2 inches in this spot, then you might be able to get a $1,000 claim because we're pretty sure your carpets are going to be wet. Something like a triggered audit, for example, if a company's operations are starting to hit a guardrail somewhere, maybe at that point we're auditing instead of doing a more general auditing of the population. Other things like paid commissions or bonus levels can be happening again objectively in real time. When you ask a technical person on the blockchain what a smart contract is, it's just code at the end of the day. It's just trusted computer code that is not rocket science in and of itself, but it has a lot more onus on it to get into the blockchain system other than a software code does. If you're a software publisher, you control the code. You can change the code and your users take it or leave it if they want. With a blockchain network, that is much more of a governance function in order to get that chain code out into the market. You've got to be vetted by the community and the authority within that community, whatever that happens to be. And then it's deployed by the governance so that that code is actually available for other peers on the network to use. And then the peers actually execute that code in the context of the node on the network, much like a server on the internet kind of a thing. As we talk about the immutable ledgers, we start to get to a point where we need to start getting this information in a more protected way, and certainly a much more lightweight way. If we've got an immutable ledger that we're putting data in that we have to carry around forever, we have to carry that around forever. And we only care about the first quarter of 2017 for so long. But we don't want to have to, have this, again, permanent weight to drag around forever. So we use a tool called hashes in order to absolve us from some of this weight that the members of the community must bear. It's one thing if we've got a little bit of data or a small piece of text versus a large report or image files or a whole bunch of pictures around a claim, for example. And again, we look at enterprises and what data they want to have out there. They want to have no data out there. They want to have no data visible by competitors, no data visible by regulators. So we start from that position of protecting the data first and then leveraging it later. As we said, when those ledgers get large, the performance may be impacted in a variety of ways. We may not be concerned about the history. And it also is very difficult from a computer perspective to traverse a linear set of data that really doesn't have a whole lot of organization to it other than time. So we need to do some things on the technology side in order to use them more effectively. And we've also got new regulation that's coming out, like GDPR, that gives you the right to be forgotten. Well, if we've got your name and address and social security number in an immutable ledger that lives forever, you don't have a right to be forgotten unless we destroy the whole blockchain. And obviously we don't want to do that. So we use a tool called hashes. These are a mathematical function that is applied to the data where we only store a fingerprint of that of data on the blockchain. So I like the picture of corned beef hash there. I like pictures of actually hashes. They're really not very exciting, and I do like corned beef hash. So that's a really good way to do it with the poached eggs in there. If you've never done it like that, I recommend it. So when we put those hashes versus the raw or clear text data on the chain, it becomes very, very streamlined, very efficient, very easy for computers to use, and then we can take that heavy data that we might need to get rid of or might need to hide or additionally protect, and we move that off-chain. And that allows us the blockchain itself to become much more performant and gives us the ability to do some of those things like the right to be forgotten, and allows it for a broader network to participate when that network is very light. Let me look at some of the different business models on the chain, because the blockchain as a network is evolutionary, not just revolutionary when we move forward. We mentioned at the beginning the private permission networks versus the public networks like Bitcoin and some of the Ethereum tokens that are around. These private permission networks are with known individuals or organizations that are in there. There's names, there's really no anonymity to them other than anonymity to the data. There's governance, there's explicit authority, and then there's transparency, hopefully a large degree of transparency in the network to turn that into a community that trusts each other to the point of delivering the service that the communities around us to support. Think of it much like a homeowners association. There's a network that's of common goal. They want to see their community thrive, and they can trust your neighbor this far to have a nice garden, but not necessarily farther than that. But that's really the key, is getting this alignment around a community. So who's committed? Who's committed determines really the speed and the impact that your network might have out of the beginning. And as I mentioned, the easiest place to get started is with your single company. You get a network up and running very quickly, but your ability to deliver impact is relatively small. It's only within the scope of your one company. So as you expand your blockchain network, it starts to slow down a little bit because there's a lot more politicking that's required in order to agree on the rules. And then when you start to bring in other partners to your network that may be helping you deliver that initial product, maybe we're involving additional industries to support a more robust solution for autonomous vehicles or construction industry, for example. And you get more and more impact as we even start to get things like competitors involved in this network, or even further, policyholders, where we have kind of a whole societal network. And you can bet when we're bringing competitors into a network and when we're bringing consumers into a network, there's going to be a strong need for regulations, regulators and direct government, if not governance, of these networks by our government authorities. because that's the impact column of that slide is really the same thing with respect to regulation. If it's just a single company kind of doing what they do today, the same with using a different technology, there may not be a lot of need for governance. But again, as it gets broader, certainly as it gets competitors in there looking at potential issues like antitrust, government and governance needs to be involved and more transparent. So that key is trust, and I put a little asterisk there because the key is really only trusting so far. In order to create this blockchain network, we need to understand those protocols of value exchange. Why is this community forming and what is it trying to deliver? Who's in there, and really clear why are they participating and what their goals are. If blockchain is a leveling technology, it's unlike things like the internet, even as it's beginning, you can take off from it, but it starts from a common playing field that everybody's got a perspective and a role to play in this community. So having the things like the monetization strategy out there and clear to the other players in the community is very critical, because if somebody's all of a sudden getting a disproportionate amount of money or value from the network, the trust is going to be eroded in the overall network, and then things start to fall down. So who do you trust in the governance? Who makes the rules, right? Once you set it up and running, how do you make and change those rules over time? That's really the most important thing in how the trust in the network is built and the value is exchanged. You need transparency and accountability in there, and over time you want to build that history of success. You can see that the network is being responsive to the community members, either directly through blockchain-related functions or indirectly by representative government in the authority driving that blockchain. So some of the realities of adoption are, again, the same things that we talked about. The regulators don't trust insurers, insurers don't trust, just trust regulators, policyholders don't trust anybody. So the key is not understanding, there's not implicit trust, but there's an understanding if I know what your goals are, I will trust you this far. And that's the idea we want to get to, is to find how far we're willing to trust each other in order to further the network's purpose. And once we do that, once we build this network into a community, that's when we'll really be able to get the impact. And that's when blockchain when the trust in the technology is such that the governance evolves to turn these networks and products into communities of delivering real value. Where we got connected organizations that are aligned by a common purpose, that are being delivered through platforms that are, as I mentioned at the beginning, that are now mature and robust and supported with an enterprise level of trust and maintenance and security. Transparency, so we can see actually how people are interacting, that they're accountable to delivering the level of quality, service, and participation they're expected to, and where they're not, the system has rules to enforce that. And that'll create these sustainable communities of equitable value. It's not about one time, it's about really long-term sustainability in order to build this history around the blockchain network. So let's link it all back up, bring it all back together. Hopefully we've got, after this, we've hopefully got a good basis for a conversation coming up next. Really the key thing is it's very early. It's still evolving very rapidly. The platforms we use are doing releases, major releases every 3 months. And when our own technology is evolving at that same pace, and it's moving very, very quickly. We're starting to actually realize some of these, the real true potential of the technology in a trusted enterprise way. So we also talked a bit about hopefully some of the fundamental definitions of blockchain that we can have a broader conversation around, the difference between distributed ledger and blockchain, distributed ledger being a part of blockchain being the entire system that wraps around smart contracts, things like hashing, and then provides the mechanism for governance to get trust into that network system. Talked a bit about the business models and how they evolve from a single company through partners, competitors, and ultimately policyholder networks, where that will require an increasing amount of regulatory involvement. And as that impact becomes higher, again, so the governance versus government, right now there's governance even in the smallest blockchain, but as the network gets larger, we need to have more active direct government involvement in there. And then really the key around the whole thing is aligning the participants in a blockchain to the purpose. What is it they're doing here? Why are they participating in this network? And what value are they getting out of every transaction? And that's where we get to this community of value, and hopefully the blockchains will start to take off and deliver some real value to our industry. So and that's when that trust in the technology turns products and networks into real communities delivering value. I think that is it. Thank you very much for your time. Hopefully kick the conversation off on the right foot with some good background on blockchain. Thank you for your time.
Thank you, Truman, for that presentation. And now if the next panel will come up, and I'll introduce Andy Beal, the NAIC's Chief Operating Officer and Chief Legal Officer, who will be the moderator of the next panel, and Andy will introduce the panel.
You want to come on out? Hey, Robin. Okay. Well, my first observation about these chairs is I'm glad they're not heated because I'd probably take an afternoon nap. They're pretty comfortable. Well, that was a very, really good presentation by Truman, very thought-provoking. Now we've got a panel, and we're going to follow up on that discussion and have, I hope, a robust discussion about a number of issues that tie into blockchain technology and the possible use of this new and emerging technology in the insurance sector. But before we get started, I'm going to introduce the panelists. Well, let's do this. Let's do it a little differently. I'm going to give you all a few minutes in the sun here. We'll start here on the far right with Christopher. They're going to introduce themselves, and then they're also going to tell you just briefly how they got so interested in blockchain technology, because I think they all have some fascinating stories. So Christopher, why don't you lead it off?
Sure, glad to. And thank you all for having me here at your meeting. My name is Christopher McDaniel, and I'm the president of the RBA Alliance. And how I got started in the blockchain space, I had a history of insurance background and technology background. And it's really a confluence of the two to be able to do something that can truly change the industry. So that's what was really appealing to me is the opportunity doesn't always knock twice for the ability to actually make a big difference in the industry, and I truly believe blockchain is one of them.
Thank you, Chris. Richard?
I'd echo that. I came from the banking and legal world, and actually spent the last 7 years at Willis Towers Watson. I headed up the financial institutions group for the US. And I spent the last few years there focused on fintech and blockchain and the risks that were surrounding it. And the more I dug into it, the more fascinated it became, and I jumped from the large corporate side to the startup world. So. Great,
great. Commissioner Mike Pieciak.
Well, thank you, Andy. I'm Mike Pieciak. I'm the commissioner at the Vermont Department of Financial Regulation, where we regulate the banking sector, the securities sector, and the insurance sector for the state of Vermont. So certainly you see blockchain technology solutions across all of those financial services industries. I think why we got interested in blockchain technology, Vermont has had a history of innovation, particularly in its captive insurance sector. I think we've done a pretty good job the last 36 years of answering the question, what is captive insurance? So now we're getting good at answering the question, what is blockchain technology? But I think we have some more work to do on that front. But really it's that innovative nature of Vermont, why we are so interested as a department.
Good. Robin.
Robin Westcott. I'm the general counsel for AAIS. My history is right here in Florida. I was with the Florida department for many years. So my interest in blockchain probably stems from my experience as a regulator. Back quite a few years ago, we did one of the first data calls around sinkhole coverage. And I really recall just the anxiety and the environment where the companies were just struggling to be able to bring that data forward. Well, as we've developed the OpenIDL, which is our first use case is around data reporting, it's that compulsion to go back and clean up the mess I made when I did some of those independent data calls, because it was hard and it was something that no one had fun. Belinda Miller used to joke about, Robin, you really shouldn't take the same route home every day from work. Someone might blow up your cars.
Okay, well, let's dive right in. As we heard from Truman's presentation, blockchain is probably one of the most exciting, very complex maybe not as well understood, new technologies that's really coming out, emerging over the last few years. So can you tell us, and this one's for all of you, can you tell us what your take is on where the industry, the insurance industry is at this point? And also, Commissioner Pieciak, a little bit more from the regulatory side, because again, you all in Vermont are doing some interesting things. So would you please share with the audience your perspectives? And Robin, let's start with you.
Okay. The industry has, over the years, had the challenge of figuring out the different ways that they were going to be successful. Many years ago, before the financial crisis, the insurance industry's made a great deal of money off investment income. And as that changed in the financial crisis, and we had that oh snap moment of trying to figure out then how do we go back to making money off actually underwriting our policies and understanding them better and our risks better, you know, that paradigm shift was very significant. And now we are to the part where insurance companies are very focused on operational efficiency, because quite frankly, that's kind of the last place to turn over the stone and try to figure out how do we change our financial dynamic in the insurance industry. Coupled with that and the push from the consumer side, where we really should begin discussing customer experience, and sometimes we don't get to that level about understanding what our customer wants to experience, and so many other industries are already very digitally advanced, where technology is offering the platform for them to have a much more intimate customer experience. So between those two forces, push and insurance, I think it's one of those times where we have the prime opportunity to look at a technology like blockchain that can create operational efficiency and reconnect us with our consumer.
So I think from my perspective, I think about, you know, what are the ways that the insurance industry can utilize blockchain technology most readily, most quickly in the near future. And I think it's certainly when it relates to policyholder management, onboarding new policyholders, certainly when it talks about claims management, managing a claim from beginning to end, and then also on the payment side as well. I think those are three very practical ways that you see the insurance industry looking to build solutions to those type of issues. Parametric insurance, I think, is something else where you'll see a lot of activity in the near future. This is a type of insurance that's rules-based and in some ways self-executing. Truman mentioned smart contracts. When you couple together blockchain technology with these smart contracts, certainly in parametric insurance, that would be very easy to say that a weather event occurred that met the policy qualifications and a payment is owed. So I think you'll continue to see those kind of self-executing developments, similar to what Robin is talking about in terms of operational efficiencies. We also asked our industry recently, we did a study and went to all the players in our industry, went to international, worldwide players as well, and asked them what their perspective was on blockchain technology and innovation in the financial services sector. And it was an interesting response. Certainly a number of those that were asked were very high on the blockchain solutions. But there are also some concerns from the industry as well, particularly from smaller carriers. They were concerned about their ability to have the resources necessary to be devoted to developing solutions, to have the resources, whether it's financial or time, to be focused in this area, to understand what innovations are happening, how that impacts their business and their markets. They also worried about how do they scale up a blockchain solution, how do they ensure that the number of transactions that are occurring in their businesses can be handled by a blockchain solution, certainly. And then a number of them talked about, you know, these legacy systems that they've had for decades. And anytime that you have a sort of a systems transition, there's a lot of cost and focus in terms of executive time and staff time. So there were some concerns about that as well. So I think those are all very well taken. But certainly all of the industry participants were still very bullish on the prospect, but they were sort of taking a little bit of a wait-and-see approach, at least as it relates to the smaller, more mid-sized carriers.
Okay, well, thank you. Thank you. Richard.
I think Truman did a great job of talking about the hype cycle and all that, but talking about how this adoption is taking place. And what we've seen already at Adjoint is We've had great success in putting single company systems on our protocol. We've also seen that start to build out from that single start. So we have created value already for our customers, including large insurers. One of the largest captives in Europe is already doing their renewals on our protocol, and they're expanding out what they're doing with that protocol. So I think we're still in the dipping the toes stage and learning from it. There's a little bit of that herding cats, trying to get everybody on the same kind of platform is always going to be difficult, and there's room for a lot of play here, but just like internet didn't happen overnight, it grew organically a bit with cycles. I think we're going to see the same thing in blockchain. I think we'll see companies adapt it and find uses for it internally. We'll see it expand into small networks, private networks, and then we'll see that expand.
Mm-hmm. Christopher.
Yeah, and I agree with everything that the panel is saying. One of the things that is very interesting to us right now is virtually all of the applications that are being built in the industry right now from a blockchain perspective are all efficiency plays. 100% of them are efficiency plays, or pretty close to 100%. And the reason that that is occurring is there's so much opportunity to do things that we already do more efficiently. For example, one of our use cases in the subrogation payments process is going to save the industry around $300 million a year. When you're looking at those kind of savings and efficiency gains, it's hard to think about new ways of doing things, new products, new channels, new processes. But as you probably have been able to tell from my accent, I'm from the South, and we have a name for that. We call it paving the cow path. And that's what we're doing right now. Everything we're doing is taking either an arduous process or a manual process and automating it right now through blockchain. Absolutely nothing wrong with that. There's huge efficiency gains to be had there. But we believe over the course of the next 4 or 5 years, we're going to start to see a shift in the industry. And there's going to be more opportunity to have new channels, new products, new ways of doing business, because frankly, blockchain is just a tool. The real benefit ultimately to the industry is around business transformation. And if we don't start transforming the way we're doing business, not just paving the cow paths, we're only going to get so many efficiency gains, and then we're going to run out of things to do. So that's the future. We'll do the efficiency gains probably for the next 3 or 4 or 5 years max. But we do think that there's ultimately going to be a shift, because once you start getting a blockchain data layer out there, it's going to enable so many new things, again, new channels, new products, new ways of doing business that we just couldn't do before. That day is coming.
And Christopher, let's follow up on that a little bit, coupled with Robin's comments about the focus on operational efficiencies, and you touched on it too. Can you talk a little bit more? You mentioned one particular use case, but can you talk about some of the other use cases that you're seeing in the industry right now? Absolutely.
We have a number of really interesting ones that are out there right now. Proof of insurance, which basically eliminates the need for a paper insurance card utilizing the blockchain. Some states already have, and some carriers already have electronic insurance cards, but what they don't have necessarily is a way for multiple people involved in an accident to see each other's insurance information. So it enables, again, the sharing of information, but maybe even more important, if you take that information, that policy information, and compare it to the DMV databases that the states have, you have a way of potentially eliminating uninsured motorists. Mm-hmm. So there's lots of interesting things around proof of insurance with that. We also have first notice of loss. First notice of loss automates the process between carriers when an accident occurs. We estimate that in a typical 3-car accident, there's roughly between all 3 insurance companies and the consumer themselves, there's somewhere between 15 to 30 phone calls that take place. With the FNOL automation of blockchain, you basically take that down to 1 call per individual involved. And because the data is being shared, and as each insurance company gets more data in from the consumer, that data is shared with all of the others. So it's a huge efficiency gain with just 22% of the market share. We did an ROI study with just 22% of the market participating from a carrier standpoint in that. It's about a $69 million savings. When ultimately over the course of the next 2 or 3 years, we think we'll probably be at about 80% of the market. When you get to 80%, it's almost $300 million a year savings, and that's year over year savings as well. And then I mentioned the subrogation one. It's probably one of the most interesting ones out there because everything from a subrogation standpoint right now is done on individual claim. So when the claim is settled, as far as which insurance company is going to be responsible for that, the other insurance company sends them a check. That's a paper check. It goes through snail mail. Mm-hmm. And when the insurance company gets that paper check in the mail, then they have to reconcile that back with the claim and figure out which claim is tied to. It's a huge manual process. So basically, what subrogation is going to do from a is do a net payments so that every insurance company just writes one overall check to every other insurance company, and all that reconciliation information is on the blockchain. So it takes you down from thousands and thousands of checks being written every month back and forth between insurance companies to one check. And by the way, it's not going to be a check, it's going to be an electronic transaction. Yeah. But to one electronic transaction, and all the reconciliation happens in an automated fashion on the back end without any manual true-up having to happen between paper checks. Again, that one's a $300 million savings as well. So just in those 3 use cases right there, humongous opportunity to pave the cow path. But again, eventually we'll need to look at things beyond efficiency of what we're currently doing.
That's good. That's good. Richard, tell us a little bit more about what Adjoint is doing, because you guys have come a long ways in the last couple of years. You did a presentation to the insurance commissioners last fall at our program in Silicon Valley.
Yes, we did.
But you guys have been pretty active since then.
Yes, we have. Adjoint created about 3 years ago, actually 4 years ago, created Uplink, which is our own protocol, which is, as opposed to, we're throwing a lot of jargon out here. I feel like, if you're like me, I came from the banking and legal world. We're talking about immutability and all these crazy jargon words.
Richard, rest assured, the NAIC has a reputation for acronyms. These folks are accustomed to it.
So they're comfortable with it all? Okay, good. Well, if you're like me and you came from a background that wasn't purely technical, the important thing to understand is there are different protocols. They have different purposes, just like you have Oracle and you have Microsoft out there selling the same type of products. There will be different protocols. Our protocol was built around security and scalability. It was specifically designed for financial transactions. We're in pilot since I spoke. We're now in pilot with Credit Suisse, helping them on treasury functions that they haven't broadcast yet, but we can talk about the pilot program. But as I mentioned, we're already doing a large captive. We're talking to a couple of large insurers about working on their treasury products and building modules off of those treasury products. So we're working on some really interesting spaces. And again, you're going to hear about Corda. You guys are using Corda. Hyperledger, you're going to hear about Ethereum. You're going to hear about all these different protocols. What's interesting is, I believe, and I hope you agree too, I mean, that you're going to see interoperability and you're going to see different systems existing for different reasons out there. But that's really where Adjoint is, and we're building and having a fair amount of success. And I think in the insurance world, as it relates to insurance, what we're going to see is the spaces where you need that kind of scalability and that kind of privacy. We're not looking for Ethereum or Bitcoin kind of public kind of exposure. You don't need it. For much of what the insurance world needs to do, you're really looking for a solution that requires that kind of security. And that's where we think we shine. But I think what's going to be interesting as far as, I agree with Chris about some of the use cases, the subrogation, things like that, certificates of insurance, all that is coming, parametric, all that is coming. But you're going to see the different protocols, as they're called, protocols being used and how they fit in their niche.
Mm-hmm. Mm-hmm. Robin, let's turn to what AAIS is doing, because I know you all are working on some really interesting things.
We took a different approach than RiskBlock did. We started with one single use case, and the way we develop things at AAIS is that, generally speaking, because we do many of the functions that an insurance company does regarding product development, compliance, forms, rates, how those things kind of are grown inside of an insurance company. We figured if we have a business problem and we can try to solve our business problem, we're probably going to solve business problems for our entire industry, because many people still do things the same way we're approaching development and other things. Well, one of those problems that we've always had has been around gathering and having access to enough data to be able to support the development and the compliance of existing programs, insurance programs, homeowners, commercial property, commercial liability. All of those product lines require additional data, pretty frequently to be able to keep up, right? And as we work with insurance companies around data, again, as I mentioned earlier around sinkhole call, getting data out of their systems is very difficult. It's, I know we have this dynamic in many of the meetings where, Bernie stands up and says we should give it all. The trades stand up and say it's impossible. And both of them are right in their own way. So we figured if we have this difficulty around data, and specifically around the reporting of statistical data and the data calls that we see growing in number from states across the country each year, if that is a problem that we have, we obviously see that that's a problem the industry shares. So our approach was around the regulatory reporting, data reporting use case. We believe that that's organically a great place to start, because it's the narrowest definition of data that we all have to be responsive around in our industry. And we very much consider that in the blockchain world, the Genesis block is the first block. We consider that the Genesis use case. So for us, it was about being able to help solve our own problems around data, understanding that this is a function that happens inside the industry that companies get generally no value back. It's not like they get a dashboard that they can see all the data that they reported to the states through these various activities, how their data actually reflected back in that greater pool of data. That doesn't really happen. We have states taking it in various different formats, so using it different ways, but ultimately, obviously with statistical data, not getting the questions answered that they need answered, because they're asking for, with additional data calls, more information to be given to them. So our approach is solve this problem around that single flow of data that already exists, already rules around, already a way to approach that, solve that, and we begin to solve a great many more problems around the data and the ability not necessarily to share data, but to gather insights from each other's data in a way that still has a protected, secure environment to do so, but gives a great deal more transparency into the process.
That's very helpful. And that's a nice segue, Robin, because my next question to you is to tell the audience a little bit more about the open insurance data link that you all have developed.
OpenIDL has been in development for about 9 months now. I feel like we've given birth. We have been working with IBM on the Linux Hyperledger platform. And our approach has been, and pretty much AAIS runs in an agile environment. So all the work we do, product development, even my lawyers work in what we call agile, 2-week sprints. We are very much about rough consensus and working code. So what we do there is we have design thinking sessions, and we put regulators and company representatives in the same room, and yes, we actually got a little empathy from both sides to try to create an environment where we could say, these are the elements that you would like to see in the data reporting process. We had those design thinking sessions, and then what we did was we went back and we developed architecture that would support that. Now, first thing out of the gate they say about new technology is that not succeeding or breaking something is actually good, which is a good thing because we actually broke the fabric the first time we loaded data. We have a lot of statistical data because we're stat reporters, so we broke it. And that kind of responsiveness, as Truman was talking about, from new releases coming out of Hyperledger pretty much constantly, allowed us to go back and say, okay, this was our problem, right? Let's solve toward it. But all those design thinking sessions that we do, we take that back into the organization and we start designing architecture that responds to that. What will happen, and it is beginning to happen very organically, is as companies start to see this and the regulatory environment starts to see that, they're like, yeah, I want that. And we say, okay, let's go build this. Now, eventually, this is a private permission network, obviously, an OpenIDL. It will be taken over. We know that its mission will be greater, as Christopher was talking about, a greater perspective around the applications that actually can grow. It will grow beyond what AEIS is licensed to do and does. I think it can grow to the life and health industry. The architecture is sound. The architecture will support these other things. You know, we've talked, Chris and I, about in our organizations about interoperability. How do we build toward each other, right? So those things are starting to happen kind of in the background. And ultimately, I think there's room for many different blockchains, and we certainly not only will need to seek interoperability with ourselves, but interoperability with other industries as other industries come online, and probably faster than we will on the blockchain technology that's out there in distributed ledger networks. So our ability to move forward as an industry is going to be very tied to how good we are at working with each other and creating the community, and then working with other environments. But OpenIDL, that's how we roll, you know. And so we will continue to open up those design thinking sessions, and we will continue to talk to the other initiatives that are out there about how we do find those paths toward interoperability and designing architecture that will be responsive to many different types of applications in the future.
Good. Well, you touched on something that I'd like for us to follow up on. And Christopher, the two of you will probably want to start this discussion, but there are a number of consortiums out there working on blockchain, and we talked about the issue of interoperability as being one of the challenges. There are probably some other challenges too. So can the two of you talk a little bit about the different groups, what they're working on, and the differences? There's a lot of activity, but also it's not. I think it sometimes can be confusing especially to the regulatory community that's trying to just follow some of the basic developments, to hear about some of these different groups out there pursuing these actions.
Right. So obviously you have two of us up on the stage. We have B3I, which is a consortium. Christopher, what platform are they using? Are they Corda?
Yeah, they're Corda also.
Okay.
And the other one that's out there is InsurWave, which is in marine insurance. Mm-hmm. And that's about the universe, the four of us.
Yeah, some of them outside of, that I'm aware of because of the IBM connection outside of the insurance industry, but if you think it through, it will link very closely. Our food trust, and that is around some of the largest grocery distributors, Kroger, Walmart, others, in that grocery space around creating blockchain for food distribution, starting with basically the field to the supermarket, to the consumer. And you know, you think about things like romaine lettuce scare and how long it took, as you know, the CDC, as they got involved, to unravel where those contaminated food sources were in the chain. Those are the type things and consortiums that are forming outside. There's TradeLens, which is around cargo and intermodal transport. I just saw one the other day about the auto industry forming around autonomous vehicles. It's probably to talk about the guardrails and the things. But I would like to mention, I think one of the biggest challenges, and Christopher and I have talked about this, is going to be around for the insurance industry, the data standard for which we all work toward, because we're going to have to be on the same page around data standards.
Exactly.
And that's where we failed, because many of these systems inside of insurance organizations, it's very random as to the standard that they used for the management of their data. I'm not talking about the communication of their data, I'm talking about the management of their data. And that might have been any given programmer's opinion on any given day about how they were going to structure the standard inside their warehousing. As a result, it's very difficult for integration of systems in the insurance industry. You'll see a lot of M&A activity, but the companies are still running 17 different systems to support those companies that were bought and come under a common roof. So for us, I think the biggest question and the biggest thing we will have to work toward as an industry, and the thing that I believe that is really appropriate for the regulatory community to be involved in, will be around the data standards for which we all start to structure our data.
Right. Yeah, no, I agree 100%. And now's the time to look forward. One of the challenges that we have is it's real easy to look backwards at standards that have been out there for a very long time. And yes, again, under that heading of paving the cow path, there's things that we can do in short term, but there's whole new standards that need to ultimately be created, that just don't even exist now. So I think that now is the time and the opportunity. As Robin said, there's basically 4 consortiums out there: AIS, us, B3I, and InsurWave. It's small enough now that we can get everyone together and get everybody's opinion on those standards, and ultimately get those standards certified through some of the industry organizations. But the time to do that is now, not after we get 400 applications out there that have to be retrofitted with the standards once they're set. It's the opportune time.
Let's follow up on something that Robin mentioned. You're referencing the 17 different systems as an example. Maybe a large insurance group. They've gone through a number of mergers. That brings up the question of really the current state of the industry, because there are a handful of articles out there that have referenced in the world of innovation, a number of insurers are really struggling because they're really being strangled by their legacy systems. In trying to really undergo a true digital transformation, they're still living years behind. So, and these are large players. So when you think in terms of presenting to the CEO of one of these large companies or a large group, hey, we've got a great deal for you, it's called blockchain technology, and he or she looks at you and says, well, wait a minute, I'm still struggling just to come up to the current state of technology. How am I going to take that big leap forward to go even further?
Yeah, they still got cows on the cow path.
Yes.
Is that before or after you went cow tipping?
That's right. Somewhere in the middle. No, it's a very good point, though, because the thing that we have to take into account, and it's something that we've done in our platform that we've created that's called Canopy, is you have to have a translation layer in there. So if somebody has 15 different legacy systems out there, again, you want everybody to adopt the standard and use the standard as much as possible, but there's always going to be a situation where you have to translate that data coming into the format that works for everybody else on the blockchain. So I think it's essential, whichever platform that you're talking about, that you have to have a way of transforming that data when it comes in. But you don't want that to be the only way. That should be built on top of good standards, not as a substitute for good standards.
Okay, we're going to change direction here just a little bit. And I think I'd be remiss if I didn't ask Commissioner Pieciak to talk a little bit more about the study that his department issued in January of this year that focused on the blockchain and implications for the banking and insurance industries. And as far as I know, it's one of the first studies that's actually been undertaken by a state insurance agency to look at this new technology. So, Mike, let's take a few minutes to talk about, all right, you mentioned earlier that in Vermont, you all are innovative. So I get the reason for pursuing this study, but let's talk about the results of the study. And you all have access. I think we printed off copies of the report, but you can also link it or get the link on the NAIC website on the CIPR page. But tell us a little bit about the findings of the study.
Yeah, so I think it's important to think about first who we talked to. So we talked to all of the insurance carriers in Vermont, some of the major consultants that do business in Vermont, all of the state-based credit unions and state-chartered banks. And then we also went beyond that to larger insurance companies that are doing business in Vermont, because we wanted to hear, what are the smallest players thinking about and what are the largest players thinking about. And in all honesty, the answer was somewhat the same, that they're monitoring the situation, that they're certainly devoting some level of resources to it, and they're waiting to see, how things shake out and what sort of the result is at the end of the day. You hear from small carriers, small banks, that they don't have the resources, financial, human resources or otherwise, to start, seriously considering some sort of independent solution. They similarly don't have the resources to start thinking about partnering with somebody else to create some kind of proprietary solution as well. So I think for the smaller companies, they're really just waiting to see how some of the bigger players react. But then again, from the bigger players we talked to, there's even some level of caution that they're approaching this field with. So I think that was sort of an interesting takeaway, that there's certainly a lot of wait and see. The thing that we worry about as a regulator, I worry about as a regulator in Vermont, is certainly the wave of innovation that we all know is coming. I mean, some of these major players that we talk to are certainly, taking a cautious or wait and see approach, but they're also making investments. I mean, their investments that they're making are quite large when compared to what a smaller company might be thinking about, even though they're perceiving themselves as a wait and see. So I think we worry about this wave of innovation that's coming, and our small local Vermont carriers, our regional carriers, not necessarily being able to adapt quickly enough, that this is yet another business issue that they have to deal with. It's another issue that forces consolidation on them potentially, or at least puts them at a competitive disadvantage when you talk about what a consumer is going to want in 3 to 4 to 5 years. So I thought the study was critically important, at least just to get this on the radar of some of our smaller carriers, to get this on the radar of some of our smaller banks, and then also to get our staff. I mean, one thing we haven't talked about on the state regulator side is the ability to get our staff up to speed on some of these issues. I mean, they're very theoretical, they're very academic, and certainly I think leadership at various regulatory agencies think about these issues a lot and talk about them, but then trying to operationalize that among our staff, our career staff, is another challenge that we face.
Mm-hmm. The report also talked about some of the challenges,
yeah,
but it also talked about some of the benefits. Can you go through those two categories in a little bit more detail?
Yeah, sure. So on the challenges side, it was kind of interesting. One anecdote that stands out to me from the report was talking about, basically scalability and environmental impact or energy usage. And I guess I didn't realize this before we did the study, but that the entire country of Iceland uses more energy to mine Bitcoin than they do to house or power their housing stock, I guess it is, right? So that's pretty remarkable to think about the amount of energy, and that's just from the activity that's happening in Iceland, let alone across the rest of the country and across the rest of the world. So certainly we heard from some of the major players concerns about, what's the environmental impact of this technology. We heard about scalability. Basically, some of these major banking players have the ability to make a number, thousands of transactions, per second, and some of the blockchain solutions that they were looking at weren't quite as quick as that, and that was a challenge for them as well. And then you hit it, everybody hit it on the head when we're talking about legacy systems. Everybody said, how are we going to transition to a new legacy system? We have, multiple systems we're working with now. That's a huge amount of resources, time and otherwise, financial certainly. So that certainly was a challenge as well. But those are sort of some of the negative side. On the positive side, certainly, I think a lot of the larger players are really intrigued about the operational efficiencies that they can achieve. Those efficiencies ultimately making their way down to the consumer in terms of lower prices, more on-demand type products, the ability to get a claim paid in a much quicker period of time, so greater efficiency from that perspective as well. So I do think there, again, was a lot of interest in some of the upside as well. We just heard from our players that they don't necessarily at this time have the resources or time, which we appreciate, to devote into their own proprietary solutions.
Well, being the sole regulator on the panel, give us a little bit of your thoughts as far as that intersection between regulation, the regulatory community, and this new technology. How do you see the regulators using this new technology?
Yeah, so that's a great question. I mean, when you think about reg tech, but just sort of a broader category of regulatory technology, certainly a lot of that relates to compliance within industry. But I think there's a big component of it that relates to regulators and the way that we're going to use technology in the future to do our jobs more efficiently and to do them better. So I think that is something we really need to think about. I saw a report recently that suggested that every single day there's something like 200 regulatory changes that occur in the world. So think about an international player in financial services that has to keep up with that constantly changing landscape locally in various states, nationally, across the country, but then also internationally as well. So certainly these types of technological solutions are going to help them do a better job at compliance and ultimately are going to help us do our job better as well. So I think regulators play a critical role, an important role in helping foster that innovation as well. I think you look at what the NAIC has provided in the last few decades in terms of technological solutions for the industry, making things more efficient, more electronic-based, speedier in terms of our communication with each other and with industry. I mean, that's a classic example, and you could see certainly the regulatory community grappling with that and dealing with that in the next 3 to 5 years as well when it comes to these new distributed ledger-based solutions. Mm-hmm.
Mm-hmm. That's good. That's good. And before we do have a question about what the future holds, but before we get there, Richard, you touched on it earlier with your current work with Zurich, I believe. But where are they with the in the insurance in the international insurance area? I don't hear a lot about blockchain other than on the reinsurance consortia. But what's going on at this point in time internationally? Any thoughts?
Well, I would throw out that one of the things that we see is I worked in derivatives back in the 80s, and derivatives struggled to get off the ground until ISDA came along and standardized things. With that single idea, you saw an entire industry take off overnight. In Europe, you're already seeing regulations about open banking. Mm-hmm. And to throw out yet another acronym, APIs, application protocol interfaces, allow us to pool data. So using our protocol in Europe, we're able to pool from Citibank, from HSBC, a number of major financials. We're able to pool real-time data and put it on a ledger. That's the kind of important momentum that we need, and this is the right group to be hearing that, because the truth is that once we have that kind of standardization, once we're able to pool data and put it on a ledger, you can do so much more with it. And that goes to Robin's point about legacy systems and all, because you become future-proof. If you have a ledger that can pool data from your Oracle or your back office system or your Thomson Reuters or Bloomberg or any database that you're using, you can change that piece out and still connect it into whatever ledger is necessary. So that's why we talk about making your system future-proof, building something that will pool data from whatever system. That's really powerful, but it starts with standardization.
Yeah.
And from an international standpoint, we're in the process right now of expanding into Canada, Europe, and Asia, and it's tough. It's tough. I mean, it's one thing to talk about standards in the U.S., and we have to look at it from a 50 different states standpoint, where different states are saying different standards. You get overseas, and it's a whole other ball game. And it's a challenge. It's a challenge. I think that, you know, standards-wise, we're going to have to start looking at this stuff from a global standard by default, not a U.S. standard first, because frankly, some of the things like GDPR and things like that in Europe are actually ahead of the standard of the, you know, the regulations that we have here. There's new things that just came out from California, but, you know, we don't have a lot of the things here yet that they have over there. So we don't want to build platforms that are different from, you know, from country to country to country. We want to have, you know, one platform that's on one standard, and to do that, you've got to get all of these global organizations pulled into it. It's quite a challenge, but if not done through a consortium type approach where everybody's in there, if it's just somebody going out there and trying to do it on their own, you're going to miss the boat. It's important to have a consortium where all the different carriers, brokers, reinsurers, and regulators globally are contributing to that standard.
Mm-hmm. Mm-hmm.
Build the standard, hint, hint.
Okay, well, we were touching on this now as far as challenges and what the future may hold, but here's the question. Assuming the evolution of the technology continues as you think it will, where do you think we'll be in 5 years, 7 years? Any volunteers?
I'll jump out there first because, you know, we're already thinking that far out. And, you know, honestly, everything we're talking about now is all blockchain, blockchain, blockchain. And that's great. But blockchain is just one tool in the toolbox. There's analytics. There's, you know, eventually Internet of Things. There's all of these different things that have to support true business transformation in the industry. So in 5 years, I think we'll make that migration, you know, from efficiency plays to new products, new channels, new ways of doing business. Going out beyond that, I think that those other things like Internet of Things are going to come in play, and whole new ways of doing business. I mean, I'll give you one that's, that I tell my team all the time. We all know how reinsurance works. What if reinsurance could be a micro process that happens in real time? So instead of it being something that's only done on a big building or airplanes or whatever, and it takes, you know, months to get it in place, what if you had the platforms in place to be able to do reinsurance for your car insurance or reinsurance for your homeowners, and you could have these micro transactions in reinsurance that could change everything about the way we're doing things? That's a very radical idea, but we think that's the kind of things that are coming down the road. As we get better and better at this stuff, and we get more and more of these things automated, it's going to allow us to do more things like that in real time at a micro level. And it's also going to allow us to do things situational. So let's say, for example, you have your life insurance. If you're sitting at home in your Barca lounger, then your life insurance needs to be here. If you go skydiving the next day, your life insurance needs to be there. And it should dynamically change with you. We don't have the ability yet to do that kind of real-time underwriting, those kind of micro transactions, but that's what the direction that we're going to ultimately.
So it sounds like risk is going to become more personalized and instantaneous.
Correct.
Okay. Any other predictions?
Yeah. Oh,
go ahead, Robin.
Oh, thank you. I think to that point, the very important picture that we need to understand is about our customer. And again, I go back to the customer experience. For right now, we use things like our, you know, the premium as a real differentiator. I would put out there that this type of tool, and it is just one tool of the many of the new technologies that we will use, which will include machine learning and maybe even deep learning, needs to be able to give our customer a different experience. And what do you mean by that, Robin? Well, I'm from Florida. I was a consumer advocate at one point. I think we don't have enough emphasis on mitigation and how we help our customer understand risk. So while we'll have this evolution toward micro products and being able to much more personalize the experience for the customer, we should never forget that in that transaction, we need to figure out as differentiators how we give greater value and how we help our customer understand risk better and protect themselves better. Because, you know, in the end, that will create better writing ratios and greater combined, you know, better combined ratios for our companies, which I was also in the solvency, kind of creates a better solvency pattern for insurance companies. That is good for the marketplace, and that's starting to center competition on a different thought around the customer experience from that personalized product to how we change how their behavior is tracking by helping them realize what their behavior is feeding into those products.
Mm-hmm. So Mike, are we going to have real-time reporting in the next few years?
So I mean, I think that's somewhat of a fascinating question, right? And I think when you think of it from a regulatory perspective, what does the next 5 years look like? I think it potentially could change the way that we do our jobs. You know, to Robin's point, she's talking about the consumer. I mean, I think regulators are thinking a similar way. What about our constituents? How do we provide consumer protection in a universe where all of the industry, maybe multiple financial services industries, are on distributed ledger technology? How do we provide our auditing functions, our examination functions? How do we, you know, certainly there'd be improvements if we get more real-time data. We could maybe spot things in real time rather than looking back at a period of time like many of our exams do and then realizing what the problems were, you know, maybe even 2, 3, 4, 5 years ago. So certainly those are benefits, but think about what it would take for us as regulators to get from now to there. I mean, it would be quite an extensive learning curve. We are undertaking a pilot project with our Secretary of State's office in the captive insurance arena to try to get a better understanding of blockchain technology. We're working with our Secretary of State's office to allow our captive insurance companies in the future to file their registrations with us, to file their corporate formation documents and all their licensure documents via distributed ledger technology. It's a very small pilot program for us to get better acquainted with the technology. It allows our staff, again, I mentioned this earlier, to go from the academic and the theoretical to the practical, allows them to get a better understanding. And then it allows us to realize, you know, the true benefits potentially for us within the department, and then also across state government as well, whether there can be other use cases and it can be scaled up. So I think taking sort of active participation as state regulators, that's a critical piece over the next 3 to 5 years as we look to what the future holds.
Mm-hmm. And for this, well, Richard, let me give you a chance first before I move to the next one. I don't want to, from the private company perspective.
Private company perspective, I think I'm optimistic, but I think that it's going to slip in and we will hardly notice it. I tell people that in fact, when I spoke at the last conference, we talked about how spreadsheets kind of just filtered into finance back in the day, and suddenly they were everywhere and you just lived with it. It was just part of it. Our system, we have a large corporation that uses ours for treasury. It pulls data from Oracle, it puts it into Citibank, HSBC, and they don't even know or care that it's being recorded on a blockchain, on a ledger. But the CFO can go back and look at all that data on this permanent immutable log. The point is that done right, it's pretty painless. And it's really just a distributed ledger that creates this permanent audit log. The point is that we're going to have 5 years, 7 years from now, we're going to have the ability to build out products that have a single source of truth. And the mind boggles in all the different uses of that. But that's where we'll be in 7 years. And I'm an optimist. I think it'll be relatively painless and we'll hardly notice it happening.
Mm-hmm. Mm-hmm. Okay, so we've got a vision of what the future looks like. Well, not necessarily 4 different visions, but certainly 4 visions. So to get to those points where we think the technology will be, what are the key hurdles that we have to overcome? We know education is one. We're educated. That's one of the reasons we're doing this program. But what are those key hurdles that you think we have to work through to get to that point?
Number 1 with a bullet. Has nothing to do with the technology. It has to do with the people part of it.
Robin, what do you think?
Well, I don't disagree with either one of those comments. I'm going to go in a different direction, though. I think one of the hurdles will be the concept of ownership.
Very true.
I think that as you get technologists and technology firms coming into our environment, the thought around building a consortium and networks that are equitable and that are built on a fair principle, there will be people who try to hijack that and own it. They'll want to own this technology. Our boss was very part of the design and the internet as it was coming online, and she tells stories about some of the largest players trying to own that technology, trying to own the internet, and that didn't work out so well for them.
No.
I think that will be a challenge here. I think that the potential of what people see as the monetization of this technology will lead them toward the bright light of thinking that owning this and cornering this is something that they should do. And we should resist that with every bit of strength that we have if we really want to have the community develop and these networks mature in such a way that we do have an equitable playing field. We have some of the biggest companies in AIS, some of the largest carriers writing inland marine. We also have some of the smallest micro mutuals. We joke and say we call them the left-handed Lutheran mutual companies, right? They're very, very small. For them to exist and to be able to adopt this technology, there has to be equity in the development of the network. So I think resisting the temptation of the monetization and the ownership of the networks is something we will face.
That sounds, I have to be honest, that sounds like a tall task when you look and see what happened with the internet, you know, and the growth of the mega internet service providers. I hope you're right, but that seems, I would think human nature being what it is would be a pretty significant challenge. Mike?
Yeah, so I mean, I think I really have to agree with Christopher. I can't quite get over the initial hurdle of education and familiarity within an organization as the sort of the premier stumbling block, if you will, or the premier thing that you need to think about and work about. Certainly there's certain technological issues that permeate financial services in the last few years. Cybersecurity is one of them. I think all board level management, all board level members are thinking about cybersecurity. They're asking their teams, what are we doing on this topic? And there's a clear threat and there's clear best practices now and there's solutions and people are working on that. But I think they also, in the same breath, ask the same question, what are we doing about blockchain technology? And I think there's a lot of pressure within organizations to be doing things. And to Christopher's point, maybe they're just doing them to do them, you know, but what is the solution that you're trying to solve? And is it really a blockchain required or necessary solution? So I think there is this gap between, I know that this is important and it's about innovation and we should be focused on it to let's implement it. And I think there's a lot in between that organizations really need to think about and better understand. So again, I am a big proponent of trying to pick out a very small, sizable pilot program to get better acquainted with it, to think about how it can be useful in your organization, how it can provide efficiencies. Because at the end of the day, it's going to have to show results, and I think before you get leadership to buy into it, you need to show some level of results, and I think a small pilot program certainly is a way of achieving that.
Yes. Okay. Well, are we ready to take questions from the audience? Oh, okay. We have them. We have Slido in action here. Okay, let's go with the top question. The use of hashes is obscuring the same. Is it the same as deleting the data? And how does this meet GDPR needs or requirements? And can the data ever be unobscured? Anybody want to take a stab at that?
Truman does.
Yeah, I mean, basically the running method right now is to disconnect the blockchain from the back office platform. That doesn't mean that the data on the blockchain goes away. It never goes away. But if you can basically break that connection, then in theory, it's right to be forgotten. But that's also untried yet in the court of law, which is probably going to be the place that it ultimately is decided.
And then if it is disconnected to the blockchain and it's stored somewhere else, then you're kind of back to where you are right now from a cybersecurity standpoint, because it's no longer on the secure blockchain.
Yeah, well,
So, I'm sorry, I think the trick is in the architecture, because the architecture that evolves has to support the idea that there is a way to wall off. There's the right to forget. Those are things that we've thought about as we've developed this architecture in OpenIDL. This will be, and this is why we say it's an evolving technology, and it's something that as we see these hurdles, it's going to have to be in the way the system works and communicates, because right now, how we've set it up is they're private data stores inside companies that's behind your firewall, right? And some of that activity that's happening is going to happen there. So the right to forget data, the right to populate certain types of analytics tools, and then for that to disappear after certain periods of time, that has to be in the architecture of the platform that you're working on.
Okay. All right, next question. Let's talk about blockchain, or the potential of blockchain to bring efficiency to the claims process between doctors and other providers and health insurers. I know there's a number of proof of concepts that have been going on in this area, but would one of you care to speak about this in more detail?
So Andy, I'm happy to jump in and then cede time to the other panelists, but instead of the claims process, I think of it on the medical record side. So if you think about how many specialists and providers and hospitals and doctors somebody might need to interact with when they're being seen for an issue, certainly the ability to get those records between providers is going to cut down on medical testing that maybe is duplicative, that adds cost to the system. Certainly it's going to result in better treatment, I think, as well, when those records can be shared more easily. And then, I mean, think about the millennial generation as well that's hopping around the country, at any given moment. I mean, their medical records are probably with their pediatric firm back in wherever they grew up. So I think there's a real ability to get some cost savings in the healthcare industry by using this type of technology on the medical record side.
Right, and correct me, and let's see, Robin, I know you've got the answer to this one, but my understanding of this example where you have health records, wouldn't that be comparable to like a smart contract as far as being on a blockchain?
Yeah.
Is that potential?
There is that potential. I think about, so my mother is 86 years old. And every time we go to the doctor, we load all her medicines up in her Walmart bag and we go to the doctor, right? And then we sit there every time and we go through everything and, So if that data were in a secure environment and there's a smart contract that could execute against that data, and the communication in the actual ledger that's happening is the hash, and no, it's not deleted, it's hashed and it's encrypted. You can't read it and make anything out of it. But if that could be executed upon in a smart contract application, yes, those things that are personal to you, that are about your treatment, can live somewhere else, but still be used through the execution of that smart contract to answer a question. Because ultimately, that's what you're doing. You're answering questions with the use of this data through the smart contract.
And I think it may be confusing to some not familiar with the terminology because they hear the term contract, but I think what we're really talking about is really just a package of data, whether it's health information or it's an insurance policy, but it's a package that can be used, accessed, and also protected. It's
a reflection of the data, not necessarily. I don't like to think of package because that makes you think that real data is flying around and being put on the ledger in such a way that could expose it. It's a reflection of the data, right. that is stored in the chain and on the blockchain and in the ledger.
Thank you for clarifying. That's a good point. Okay, next question. Let's see, blockchain is promising, it continues to be discussed. We're proof of that. Realistically, when will it be functional and useful to the insurance industry and regulators? I think we touched on that a little bit earlier with our question about what does the future hold, but now let's be a little bit more specific here. You know, when do you all think it's going to be truly functional?
Well, it's going to be truly functional this year. We are in the final stages of testing our proof of insurance and first notice of loss with our first 6 carriers, with the goal of early summer. That's going to be in real production, so this year.
Yeah, today OpenIDL can support data reporting today.
Last year.
Like Price is Right.
There's a lot of one-upping here.
We've been doing renewals on a captive since last year, since early last year.
I feel older all of a sudden, like I've been sleeping for the last 5 years. Okay. A manual process may require multiple approvals, but each is a check for accuracy. With blockchain, errors may go unnoticed for a long period. What do you think?
Well, I don't think you get rid of your checking process. Your checking process just gets automated. You know, so there's not as much manual checking, but you know, I don't think you get rid of, just because your data is in a different place doesn't mean you don't still check your data for accuracy.
And that is really important in the consistency and the standard that data is reporting for, because you're not just using it for one activity. It is your transactional record now, right? The things you're writing in that private data store and the interaction that is occurring through smart contracts on the blockchain is your institutionalized record. The desire for that to be right is gonna, and I agree with Chris, that is part of the process. It is taking those checklists and automating them.
And I would say also, you know, the blockchain is not a technology that's out there to take the place of your back office system. You know, a lot of times when we get new members on and they really start getting the concept of blockchain, what it can do, they start, let's move everything we've got to the blockchain. That's not what blockchain is about. It's about sharing information that needs to be shared, and if it doesn't need to be shared or you don't need to have a permanent record, keep it in your back office system, and where you still have all those checks and balances and everything else. Not that we wouldn't have them on the blockchain as well, but the point is, this does not take the place of your back office system. It still exists.
I think Chris was right, though. It really is a way of sharing information. We're in pilot now on a program for a large industrial who does their intercompany loans, and they pass around PDFs, and then a Word document gets altered and this and that. There's 17 steps that they do internally, and each of them leads to potential errors and problems and whatever. We're going to put all of that with a shared source of data, and over time we'll build the smart contracts, which is a terrible but the automated workflows will make that process cleaner with less errors.
Let me go back to an earlier point, because we were talking about uniform data standards. I'm just curious, Chris and Robin, where are the two of your groups as far as working together to create uniform data standards between your two consortia?
We're dating.
You're dating?
Yeah, we're dating.
That's a
We've
good
been
way
on
to
a
put it.
couple of dates. That's where we are.
But has the courtship officially started?
I think so.
Yeah.
Good. All right, next question. And this is a valid concern, I think, when it comes to a lot of new technology, and that is, does automation in insurance mean major job losses?
I think it means different kinds of jobs are made available. You know, some of the more traditional things where people are data entry and all that kind of stuff, yeah, absolutely. That kind of stuff is going to go away, but it opens up a wealth of other jobs, and data scientists, and you know, if you all of a sudden, you know, have all this data at your fingertips that you never had before, what could you do from, you know, new products, new channels, new ways of doing business? And all of those things are going to take people to make them happen.
Michael, I'm going to chime in here. When I was a regulator, the ability and challenge to keep smart people in those jobs, right? And you're starting to even see that more as we have a big, folks retiring, especially in the regulatory industry. But we also have heard the argument about how difficult it is to recruit younger people into the insurance industry. We're just not sexy enough for them. And quite frankly, we have need, right? And I talk about this with my lawyers, is that I have a group of really bright, intelligent young people that are attorneys. I could really use their time a lot better in building and creating new types of products for the industry instead of trying to recreate the policy form wheel every time we do a new program or compliance change. You have people in your organizations who can change and evolve in the type of job that they do and be better, smarter, more efficient, and drive the business forward instead of just doing the repetitive jobs that, quite frankly, can be boring.
New opportunities.
New opportunities.
I think that's exactly right. I mean, certainly, I think we all are prepared for disruption to occur. I mean, innovation, disruption, certainly as a result of innovation, oftentimes we've seen it over the last few decades, and additional automation will mean that there's additional disruption in terms of losses of jobs, but then also new jobs that are created. Certainly from a state perspective, from a regulatory perspective, to your point, Robin, there's no shortage of things that we want to be focused on and want to be doing. So if we are able to, have some level of automation come in and be focused on the more rudimentary things, and we can be focused on the more high-level, thoughtful, important things, that's a win certainly for us. And we would need the same amount of people to do that type of job.
Okay, next question. Let's see, if blockchain is a network of decentralized computers, what are the contingencies for computer failures or regional internet outages? Similar to what we just, we experienced it, Friday morning here at the hotel.
Oh, part of the benefit of a blockchain is the whole point of that information is shared between multiple parties. In our implementation, and other platforms vary, but in our implementation, we have something called a notary node, which is a blockchain that's basically a traffic cop that says where everything's at. So if, let's say somebody's server, farm was in a building that burned down, we would be able to look back at that notary, and when they got a computer up, we'd be able to recreate that for them. So it actually provides more redundancy than traditional technology.
So Christopher, you raised an interesting point about a notary, and I've heard about this concept, but in an open community, who serves as a notary?
And that's why you need a Switzerland, somebody like ourselves at RBA that is not a carrier, not a broker, not a reinsurer, but someone who is Switzerland that can manage that notary for you.
Okay.
Now that's our platform. Other platforms vary, but that's the way our platform
Robin,
is.
what about?
I'm licensed to do it, so it's an advisory organization and stat reporter. No, I think Switzerland is a good description, but the community also has to evolve to be a participant in the governance of blockchain. It's key to any blockchain's success is that the network comes together, and I do believe regulators are part of that network.
Yeah, see, that's an important issue I think that we haven't really touched on a lot, is that in this community, you still have to play by rules.
Absolutely.
And so then the question becomes, who sets the rules and who enforces the rules?
And that's why consortium, again, is so important, because from an RBA standpoint, we don't make the rules. The members make the rules. So the carriers, the brokers, the reinsurers all have equal votes, and whatever those rules are going to be, they decide those rules, not us.
Mm-hmm.
We're keeping ours a little cleaner on the governance structure around insurance companies. And the reason being is that for us, now there will be opportunities for board members that come from those other contingencies. But we believe, especially around the advisory organization space, some of the greatest peril that has come around data has been when companies have lost control of their data, either through, again, that monetization model and people making money off of the giving up of the rights and the control of data. So we actually, in Open Ideal, will focus more around the insurance companies being a little more powerful in that dynamic.
Andy, if I can just make one point. I mean, you mentioned, who's going to make the rules and who's going to enforce the rules, and some might think, well, shouldn't the regulators be involved in that, or shouldn't they be the ones doing that? And it's a very simple point that I try to make clear to state legislators or whomever might be asking us, like, what are you doing to regulate blockchain technology? And we say, well, you know, we already have a whole set of regulations as it relates to financial services. You have to comply with our insurance laws and our banking laws and our securities laws. So if you do that through a technological solution, you know, it's got to comply with all of the regulations and all the statutes that we have. So if you're in financial services, we will be regulating you. But if you're simply a blockchain company or using that technology, you know, that's not something that we're going to be regulating.
Good point. Good point.
The state-based regulatory system works. So what we're talking about here is just executing it in a different technology. That was for you, Mike, just so you know.
Okay, it sounds like there are definite benefits to regulators, access, and insurers as far as cost, but how do you get over the inertia opposing change? And I think this was something we actually touched on a little bit earlier as far as, you know, the challenges, right? It's moving to something new.
Well, we've had a little experience with that in AAIS. About 6 years ago, the leadership team changed at AAIS. And what I would tell you was the main reason that we've been able to, really, we called it our 80-year-old startup company for a lot of reasons, and we've moved in a very different way. When we walked in, everything was an old AS400. Everything had to be migrated to a cloud-based environment. We couldn't even get email or phone messages unless you were physically sitting at your desk, okay? The key to that was the commitment of leadership to the change environment. It was about living it every day. And the team and the leaders and our president, our COO, believed in what we were doing. And to me, that was the key for the culture change. I think that's the exact same thing that has to happen for blockchain. The leadership in companies, the leadership at NAIC, in the state regulatory environment, the leaders have to be committed to change, and they have to walk the walk every day and talk the talk every day and believe in it, because nobody that works for you is going to believe in it if you don't.
Right.
You know, that is for sure when it comes to culture change. I can vouch for that. But I do think that, again, based on some of the things you read, some say, well, it's a solution in search of a problem. I mean, there still has to be those successful arguments that we truly need this. There is truly a value add. I mean, it's one thing to change culture for the sake of changing culture, but there has to be an end game, an end benefit, and that's what I think the business leaders and the regulators truly have to see. And I think at this point, everything is still fairly new. There's a lot of interest. There's a lot of potential, but it's still in that feeling out stage, if you will, the dating stage, if you will, where you're still trying to explore and try to understand how it works and how the applications may truly benefit both the industry side as well as the regulatory side.
I agree with you totally, Andy. I think it's a little bit chicken and the egg in that way, right? I think executives want to see results and want to see the ROI, but without the investment and without, you know, taking action, you're not going to see those success stories. I also wonder to what degree companies think they can just sort of draft off of what other people are doing and step in and take advantage of innovation that's happening, you know, whether it's at a state level, a government level, or whether it's in the industry level as well. So what's the value of devoting your resources into that type of project if someone else is going to figure it out and then you can benefit from it?
Mm-hmm. Mm-hmm. And I would say that you know, that is a very valid thing. We hear that all the time, you know, from some firms that say, well, I'm just going to watch what everybody else does for the next couple of years and then I'm going to jump in. But if you watch what everybody else does for the next couple of years, you're stuck with what everybody else defined on how this is going to be done. You're stuck with the standards that were defined. You're stuck with the systems. You're stuck with the use cases and everything else. Better to get your voice in there now. Even if you don't necessarily implement, you can be a fast follower or whatever, or even slower than that if you want to. But be involved in the discussion. Yep. Mm-hmm. At least be involved in the discussion, because if you're not involved in the discussion, then 2 years from now, you're going to have a real hard time jumping on that train when it's already whizzing through the station.
Yep. All right, next question. Let's see. Can you give an example where blockchain is being used commercially today?
This is for me. Not sure the prior answer is legal. Unfortunately, I cannot use the name of our client because they are going to be doing a major announcement, and they've asked us not to speak in public about their name yet. So I can't give you the name. If you come to me afterwards, after a couple drinks, maybe we can talk. but I can tell you this, they are up and running. They're doing their captive renewal process. So currently the insured, the primary insurer, the captive manager, all the fronting insurers can see the same pool of data live on our pool. Once they do that, once the approval goes through, it pools money from the various accounts in real time, okay? They have 9 companies on it right now. By the end of the year, they will have 50 companies on the system using this. But in addition, that's small peanuts compared to what Maersk is doing. Maersk is up and live, and if you're not tracking that, it's pretty phenomenal what Lars and the team have done in Europe. Use
that example too, yeah.
Yeah, I mean, that's incredible. So marine insurance is way ahead of the curve because Maersk, because someone like a major driver, Maersk, has pushed for it and made it happen. So there you see that's up, running live, but then you've got all kinds of smaller examples. AXA does parametric insurance for flight, so that if your flight is canceled, you automatically get paid. You've got Everledger insuring diamonds on a blockchain. So you've got smaller examples, but just look to Maersk. I mean, that shows as a shining example of what is possible. After next month, or hopefully a month or two, we'll have our announcement. You can talk about that one too.
Good. All right. Next question. Broad-scale data sharing and standardized business processes has antitrust implications in many industries. Insurance has a limited exemption, but what are those implications? Any thoughts?
Well, again, keep in mind that the data with virtually everything that's being done now is efficiency plays. So that means that's data that's already being shared either in a manual or a less efficient manner. So it's, at least in the foreseeable future, there's not a situation there because it's data that's already being shared. That being said, though, you have to be very careful with underwriting data, specialized ways that you're doing business, competitive capabilities, things like that. And we start out at every one of our meetings with an antitrust statement because you have to be diligent on top of that. But at least as long as we're paving our cow path, it's already shared with everybody, so we're not stepping over any bounds.
And that's part of our reason we started with the example and the use case that we are driving forward is that thin stream of data, right, is already anonymized, aggregated, and sent in this process to the regulatory environment, right? It happens. And so for us, it's starting with that stream. I think that that's part of the reason that the regulatory process has to really come into play here because, there will be situations, I think, in the future around blockchain where we will have to be very careful about that. Right. And we will have to examine whether or not we believe that the ability not necessarily to share data, but to have those insights even into the certain types of data of whether that could be considered an antitrust violation where consumers, you have to have, as a regulator, the ability to see if there was unfair discrimination, if it was an excessive rate or inadequate rate, right? Those are the primary pillars of what regulators do. And that transparency into how our products are in the marketplace and how we're acting as participants in that marketplace will have to be continued to be monitored. And it's definitely something that we'll have to be aware of as the architecture and the networks form and move forward.
Okay. Before we take the next question off the screen, I just want to check. I know that there are mics in the audience. Does anybody have any questions, follow-up questions based on the answers or the questions with regard to what we've covered so far?
I'll be real quick. I'm always intrigued when someone uses a word today that had a meaning 40 or 50 years ago. Hash in my day was dope, but now it means something new. So my question is, but it sounds like hash today means I don't trust you. So the 6 of us are in a blockchain, but I don't trust Andy, so I'm going to put a hash on you. and but whatever that is. But what he mentioned was that trust is a big thing about blockchain. So how does the lack of trust with hash dovetail into the need for trust in the whole environment of the blockchain? And maybe I'm misreading it, but I'm just curious how it all works.
I don't see hash as the lack of trust. I just see it as security.
Yeah.
And the ability to encrypt and the ability to have the level of insight that's shared without pure data, raw data being shared on the chain. So I don't really see a hash as the distrust part. I see it as the security part.
And maybe I misread. I thought he said it was a way to exclude certain members in the blockchain from data. That's what I thought, but maybe I miss. Okay.
Truman, why don't you go ahead and up to the mic so everybody can hear what you're saying, because it's
Sure. So what a hash is, it abstracts the data but keeps the integrity of it in the blockchain, right? So the data is still available, but it's abstracted one layer off the chain. But that thumbprint, that hash of the data that exists on the chain, you could, if you access that data that's just off of the chain and look at it, you can recalculate that hash and make sure that the data you retrieve later has the integrity of what it was originally when it was put in the system. So you can track, get a whole bunch of data, aggregated, put the hash of the thumbprint on the blockchain, and then later on make sure that data is still what it was originally submitted. So you've got an audit. No, you're not excluding one person at all.
Okay. But you don't have to trust Andy.
Right. Right. But yeah, right. Don't trust anybody.
Right. Thank you, Truman.
And I had to make Truman not put like the real hash, because we do cannabis insurance at AIS, and so we went with the food thing instead.
Well, it looks like, unfortunately, it looks like we're out of time, but we are planning, we do have a reception plan for the hour immediately afterwards, and all of the panelists will be there. So if you have some follow-up questions and you want to have some sidebar discussions, please join us at the reception. I'd like to thank our panelists today, Robin, Commissioner Pieciak, Richard, and Christopher. Would you please give them a round of applause? Can we go back live? Okay. This whole area of blockchain technology is going to continue to receive a lot of attention, I think, at the NAIC going forward. I know we're involved with a number of programs both on the West Coast and now hopefully on the East Coast. But it's all part of our effort, again, to better inform the regulatory community and also learn more from the experts, such as the ones we have up here on the stage. So stay tuned. I'm sure there'll be more information coming out on future programs. So again, thank you for attending the program today. And again, please feel free to join us at the reception.
you.